Speak, and then we spotlight you.
Cool. Okay, we are live now. Okay, we are live now.
Great. Good evening, everyone, and it's again a pleasure to have you on this evening. First, I'll say a happy new year to everyone who is a part of Techbiz. Hey, it's I do pray it's 2023 in which our dreams will be fulfilled and the aspirations will be met. So on that, I want to welcome you officially to Techbiz. Today happens to be the 94th episode of Techbiz. Interestingly, how time flies, and seeing that we've been doing this for about 2 years now, I mean, creates some level of excitement. Great to always connect. I like the fact that it's about the ecosystem. It's about people doing things in technology, driving the startup ecosystem, trying to make a change. It excites me to always bring Techbiz to you every last Thursday of the month. And so again, for people that are just joining us, what's Techbiz? So Techbiz is one of the platforms that it's being promoted by a co-innovation center. And the aim of Techbiz is to be able to bring subject matter experts, to discuss with people in the ecosystem areas we think that they should be shedding more light. They're subject matter experts on these areas, and we look at need states in the ecosystem, and we bring people who can come and share with us so that people can learn. Techbiz is not just the Thursday engagement alone. We have a forum where we also ensure that we continue to provide support and handholding for members of the ecosystem who choose to be a part of that. And I'm sure my colleagues on the call will drop the link. So we have the forum where on Telegram, and I think also on WhatsApp now, where we have people share with us up-to-date information about what's happening in the ecosystem. Things generally related to growth of the ecosystem. So Techbiz happens to be one of the platforms in which Eco Innovation Center strives to live its mandate and to fulfill its mission of providing the right handholding and support structure for startups that seek to commercialize their enterprises. Again, it's startups that seek to commercialize their enterprise. And what is Eco Innovation Center? Eco Innovation Center has both an incubator and an accelerator, serves to help from end to end, helping people and organizations from their ideation to commercialization. So we don't only worry about people who have ideas. We want them to have the ideas, incubate the ideas, and then we help them accelerate by achieving commercialization. And that's why Co-Innovation Center was set up. Today we're located in 50 Awolowo Road in Ikoyi, and we try as much as possible to make sure that our works get across the globe. And we do have quite a number of people who are always a part of the work we do. The Co-Innovation Center brings to you quite a number of hackathons we've had in time, perhaps from startup hackathons to marketing hackathons to climate change hackathons. We're having the Secure Arc, which I think my colleagues will also drop a few information about that, maybe the flyer on the group, and then people can just share. We have the Secure Arc where we're looking at physical security, biosecurity, and cybersecurity. Again, it's the age of all of us living online, and it's important that we continue to look for those ideas that make our world a better place. Eco Innovation Center looks at 5 key areas where we provide incubation and acceleration support for startups. So when you're talking about the areas of market access, that's media and marketing. When you're talking about healthcare, renewable energy, civic tech, and then agri-tech, those are the 5 areas that we provide support to startups. And again, it's my pleasure coming to you this evening and bringing you Techbiz, the 94th episode. I mean, it comes with so much joy doing that this evening. Thank you very much for keeping a date with us and for being a part of this. And today, again, we'll be talking about something that I think I find quite interesting. Is a topic that's quite important as we begin to look at issues around financial due diligence and getting investors buying. So today we're talking about financial due diligence and getting investors buying. There's no better time to talk about this when we look at the general mood across, not the nation, across the world, across the investing landscape. We see fears of recession. We see people struggling to have raises for their businesses. We see, we call it an investment winter, which is when people are not investing as much as they should be. There people are having COVID, and we just generally see a drying up of investments, especially globally, coupled with so many things around, of course, aftermath of COVID. Then we're talking about global recession. We're talking about geopolitical tensions. All these are lead to a lot of economic challenges and austerity measures across the world. And again, the startup ecosystem has been impacted. And as we seek to intervene and to bring information to our people, we found it necessary to talk again today about financial due diligence and how to get investors buying. If we do not have enough funds going out there, then for you that needs to raise, we need to be sure that we're properly in the right support structure for you. And with only 40%, that's what statistics says, of startups who want to raise, who finally are able to raise, it is important that we continue to provide startups to entrepreneurs as they struggle to communicate the health and the structure and generally the overall performance of their businesses. We find that communication is an issue, getting investment ready is an issue, and we want to improve the knowledge so that the chances of our startups being able to get the right funding and investment to commercialize their ventures becomes paramount to us. And today we have a subject matter expert. So today I will be having, again, my name remains Victor Benga Falabi. Apologies. I am the host of Techbiz and the founder of Eco Innovation Center. And it's always my pleasure to host you and have you on the platform. So today we're talking to an angel investor, okay? And so for him, it matters. In the whole value chain, the people that are likely to lose out the most if they make a wrong bet are angel investors. That the early investors, they take significant amount of risk, and therefore for them, understanding what the chances of survival of an idea or a venture is key to them. And therefore, we're talking to an angel today who is an expert. He's a tech and business innovation leader. Like I said, an angel investor focused on tier 2 African countries, African cities. And he's also a fund manager. He's got over 2 decades of experience in business communication, which again, we have identified as we prepared for this Techbiz, identified communication, business communication as one of the key areas that people need to improve to better their chances of having a raise. Okay. He's has experience in communication, process design, startup and innovation management, product development, and community leadership. Okay, he's clearly one of the foremost startup and entrepreneurial ecosystem builder in Nigeria, and his focus, which again I find quite exciting, because everybody seems to think, hey, except you're in Lagos, startups or ecosystems will struggle. No, he's focused in the south and southeast of Nigeria, where he promotes what is called he has a Startup South, where he helps founders to raise funds across Nigeria. He also happens to have a startup. So he's the CEO of Avila and Hills Innovative Systems Limited, and he's a convener of Startup South. Like I said, Startup South, in case you are not aware, is an innovative community and project inspiring the next generation of high-skill founders located in South and Southeast. So that's the focus. Also, which aligns with what we're trying to do, help to provide the support for them. But again, geographically, he's there. He serves as the director of South SSE Angel Network. He is the director there. And of course, is the communications director, which is key at the IMO Economic Summit Group, and is the general partner at Rebel Seed Capital. Okay, again, listening to this profile, you know, the cap actually fits. He has the requisite promoting venture, helping venture scale up, providing funds to venture, helping to see how general economic activities happen in South and Southeast, and it is an ecosystem builder. And so you will agree with me that today, again, we have somebody who is a subject matter expert, and he can be able to discuss with us what he sees or how he thinks we can get past the challenges around financial due diligence and helping to get investors buying. So ladies and gentlemen, thank you very much for joining us, and do help me welcome Uche Aniche, the CEO of Villa and Hills Innovative Systems and Director SSE Angel Network, as he steps in this evening to take over the drive of Techbiz, and he shares from us from his world of experience. Uche, nice to connect with you again, and it's always a pleasure to be interacting with you and to have you on the platform. Thank you so much.
Thank you so much, Victor. It's really a pleasure to be here. Great stuff that you're doing with the Innovation Center. Like I spoke to you when we met. To a large extent, I thought this was the government stuff until, that, and I'm sure, I don't think I'm alone to think that it's a government stuff, but guess what? This is truly what ecosystem development is about. The ability to connect the stakeholders, the critical stakeholders, of which government is one of the major critical stakeholders. And so I give it up to you and the team for what you're able to do with the co-innovation center. And thank you for having me here. Hopefully I can share a few thoughts with the people. I expect that we have a lot more startup founders here. So I'm going to try to be a lot more very very mundane, if you would. I'm not, first and foremost, I don't, of course, you would have, when my profile was read, you would have noticed that I don't have a financial background. So, but I don't need to have a financial background to discuss financial due diligence for as far as the startup is concerned. And so, he's already read my profile, and I don't think it's important to go. I don't think it's important to start going through that, but just permit me to say that I like to refer myself as a forward failed founder. If you know what that means, a forward failed founder, which means that I've done some of the things you're trying to do today. I have done them, and I've failed in quite a lot of them, and I've learned my lesson. And to a large extent, I'm taking most of those lessons that I've learned trying to do some of these things. So now try and support those of you who are coming up and who want to be able to blaze the path. So I was the pioneer manager for Raw Hub, which happens to be one of Nigeria's, the first Nigerian tech incubation hub. Of course, every other thing Victor already said. Through the Rebel Seed Capital, for instance, we want to be able to support founders that are building startups, wealth creating, innovation centered startups in what we refer as tier 2 cities. And tier 2 cities are usually those cities where you don't have a lot of venture capital going to. Those are the type of places we want to be able to support founders there. So enough of that, because I don't think we have a lot of time today. And so I'm going to just dive deep into this, and hopefully it's going to be as interactive as possible. So if you look at, I'm sure some of you founders may have seen the news recently. You may have seen the news where a bank in the US, JP Morgan precisely, is suing a founder by the name Frank, who for, in quote, allegedly lying about its sales, right? So the backstory is that JP Morgan purchased this startup, acquired this startup for $175 million a year or two plus. And after the whole deal has closed, they are now realizing that, according to them, that the user reported was fake. I don't know if any of you have seen that news, but if you Google that, you will see. Now, why is that important to our conversation? It's important because one of the things that a lot of analysts have been asking has been, didn't JP Morgan do due diligence before acquiring this company? So with that, I'd like to start by saying, so what exactly is due diligence? I'm not sure there's anybody on this call right now that don't know what due diligence is. So this is not going to be that academic exercise, but allow me to just say that due diligence in a layman's term is a process or is an activity to try to validate information that has been given, especially in the startup scenario, validate information that has been provided by founders. In other scenarios, it's typically to validate information. So when somebody says, have you done your due diligence? They're simply saying, hey, have you reviewed the facts of the matter? Have you reviewed the facts to confirm? Have you used other means to confirm and validate that the facts presented to you are indeed accurate and they are correct, right? So that is what is referred to as due diligence. Now, in the startup space and in business generally, by the way, due diligence is not a startup word, it's a general business-wide activity. So every organization, every company who wants to, either as investors who want to invest or when somebody is acquiring a company, they are typically investing in that company, right? So they are buying off a company. So if you're buying a company, you want to be able to go and review their books, you want to go and be able to review their system. What are you trying to find in that? What you're typically trying to find out is, number one, are their financial records validate the claims that they have made, right? So somebody can come and say, you know what, we are the best thing that has happened in sliced bread, and we have, as far as we're concerned, we have 2 million customers. We have 2 million customers. You can work with us, blah, blah, blah. So the first thing is, okay, we're interested in working with you. So we would want to do due diligence. So typically, they would say, okay, here is our term sheet, or here's our term sheet, or expression of interest. Sometimes it's the expression of interest document, and then there's a non-disclosure agreement in place. And the next thing you hear is, okay, so can you allow us to see your records so that we can confirm these claims that you've made? So they want to be able to find out the financial details that you've provided, the financial statements that you've made, are they accurate? Are you making the money you said you are making? Are you paying the amount of salary you said you are paying? Do you have the type of customers that you say you have? So a number of times you see people are doing commercial due diligence, or they are doing financial due diligence, or they are doing legal due diligence. So when they are doing commercial due diligence, they are simply confirming that the fact of your business, the unit, the economics of your business is actually what you claim it is. So they are trying to make sense of that whole record. Then when they are doing financial due diligence, they are essentially trying to find out that you indeed have the records that you say you have, and that you're keeping your records properly, and that there's no fraud going on beneath or underneath the hood. All of us here, maybe quite a number of us will be familiar with certain cases where, for instance, after Uber, for instance, the issues that Uber had, certain stuff started emerging, how reckless for instance, that the leaders of the company were. Then you also, the recent one for it is that of the founders of the platform, the crypto exchange platform. Now, so people kept asking, so were there no due diligence being done when these people were raising money? So in a long and short is that most of the issues that have been reported lately about malfeasance in the space has been a failure largely of due diligence. Okay, so when people do financial due diligence, they are just trying to check to ensure that your financial record, your financial statements, and your financial processes are in order. Okay. Then when they are doing legal due diligence, they are simply trying to confirm that your company has, they are confirming that your company structure is proper, you're properly registered, you are up to date with legal requirements for running the type of business you're running, that you do not have any form of defect in terms of legal standing, in terms of standing with the law that shows that could impact or potentially impact the business going further down. So these are the stuff that they try to do when they are doing legal due diligence. Okay, so most times what you will find for early stage startups is that investors would want to do financial and legal due diligence. Okay, they want to do this due diligence because most times there's nothing there to review in terms of commercial due diligence for startups. Most people who do commercial due diligence would be companies that are advanced, maybe companies at the later stage, maybe growth stage. So you typically see commercial due diligence for investors, most times people who want to acquire them, right? So you see them doing commercial due diligence. So what are some of the things you should know as a founder in order to prepare for due diligence, right? So some of the things that I believe you should know as a founder is that, number one, due diligence is an important part, is an important step in raising money. So as you are raising money, as you're starting to try to raise money, understand that the investors will require due diligence. They will require due diligence, and so prepare for due diligence from day one. So what does it mean to prepare for due diligence from day one? Well, it means that you should. Okay. So what does it mean to? I'm sure there are questions coming up. I'm sure that Victor will collect those questions later and we can begin to answer them. So prepare for due diligence from day one. So what does that mean? What it means in essence is that you should begin understand the requirements. What would an investor or what would someone who's conducting due diligence want to look for? Essentially, what are they practically looking for? And so when you understand what they are looking for, keep those documents, begin to keep those documents together. So for instance, knowing that financial due diligence is going to be, they are going to do financial due diligence. What are the documents they're essentially looking for when they are doing financial due diligence? And so basically, what's your income, the income statement. So a lot of times, if you already have customers, which I expect you should, because I tell every founder, the most important thing you need to have as a founder is a customer. Like Victor said earlier, you will not. I mean, it's winter. I mean, we're entering a winter season in terms of fundraising, right? And so expect that there will be a lot of scrutiny coming up now. And if it used to be hard to raise money, it's going to be harder, right? Because people are going to then begin to pay attention to some things that they had overlooked. There was a time when people only needed to raise money. There was a time when investors invested just because they know another investor is investing, right? I'm sure some of you have heard of the term fear of missing out, or FOMO, as it's called. Truthfully, FOMO was real, or is real. There were times when investors invested in companies because some investors they know had raised money or had invested in a particular company, and so they didn't want to miss out. And so there was no need to even try to do due diligence. So what that meant is, if this first investor who invested did not do proper due diligence, everyone who invested, by virtue of the fact that he invested, would suffer whatever fate that before that startup because of the lack of due diligence. So you need to prepare, keep your documents, keep your records, get your so if you have your customers, so you need to create. One of the things I tell the founders is create a data room, and it's not difficult to create a data room. And in your data room, you want to use, you can use tools like Google Drive, for instance, to create a data room and give access to only people. Sorry, just 1 minute. And just you can use tools like Google Drive to create a data room. And what does it mean? Essentially creating a folder and creating other subfolders within that folder. And what are you trying to do? To organize data as easy as possible. So that brings me, I will tell you about things that you could have in that data room. But let me go to the next point, which is try and be structured, make things easier. A lot of times, people who are trying to do this, let me tell you, investors will not come like I am now. I wouldn't go looking at your documents. I'm going to most likely outsource it to a professional to do. And a lot of times, these professionals are busy people. And as much as I'm paying them to do thorough work, they can send a report, a negative report concerning your business. And the only reason for that is you did not provide them the documents they wanted in a way that they can access it. And because they have time to deliver, they simply write a report and write a report that could potentially impact your ability to raise money from us, right? So assuming that I have sourced and I recruit an accountant, for instance, a financial consultant, to say, go do a financial due diligence for me with XY startup. And the guy sends a message and says, please send me XY documents. And then you send some documents and you didn't send some, either because you didn't know what it was or because you didn't think it was important. This guy comes back and says, I need XYZ. And before you do all those back and forth, the time with which he's supposed to respond to me is already counting. And in order not to be faulted and to feel like he didn't do his work, he comes back and says, we have reviewed these people, they didn't have this, they didn't have this, they didn't have this. And that's possibly something that you already have. And because you were not structured and organized, the guy counted it against you. And a lot of times people have missed opportunities that way. So be structured, be organized. And the other thing you should do is embrace professionals very early. Embrace professionals very early. Lawyers, accountants, they will definitely, especially those of them that have experience in the startup space. I've discovered from my experience that not every lawyer understands the startup paradigm. Okay, not every lawyer understands the startup paradigm. Not every accountant or financial consultant understands the startup paradigm. So a lot of times they are going to they're going to try to pit you against traditional businesses, and they're going to judge you based on those traditional businesses. So a lot of times when they send in the report, like for instance, as Sean, sometimes when they send in those reports, I do my own personal review, and then I go back to them and say, please, did you ask them for this? Did you ask them for this? Did you ask them for this? Right? And because I send those questions, sometimes the answer is negative. They didn't ask those information. And because they didn't ask those information, they have sent an information that if I take to the syndicate, because like Sean, for instance, we invest in syndicates, unlike the VC where VCs can make up their mind. A lot of times, angel investment networks do not, depending on the type of model they run, they invest in syndicates. And typically, what syndicate does is when there's a deal, somebody says I'm interested, another person says I'm interested, and this other person says I'm interested. So, and then they form a group who are going to do that deal. For us in Shonda, how we work, right? And then, if I'm going to take this report to this syndicate, there is a likelihood that taking this report in the manner it has been presented to this syndicate is going to result in a no-show for this startup. And meanwhile, I sometimes know that this startup deserves to be invested in. But because of XYZ, this guy has not done the job he was supposed to do. Because the startup himself have also not made it easy for this guy to do this job. So I think you should pay attention to that. And I think it's something that we should highlight, that your work as a founder is also to make things easy for the people you're dealing with. Be them investors or be them consultants working for those investors. Try as much as possible to make things as easy. Let it be possible. Let it be easy for them to discover information that they need to make decisions regarding the investment they want to make in your business, right? So lots of times you get to have, I talked about the structure of the folder. So a lot of times what people get to look out for in a structure, in a folder, for instance, is the folder should have stuff, should have a subfolder called legal folder, right? Under the legal folder, for instance, you should be able to group, maybe create more subfolders or throw in documents there. And what would you want to have under that legal folder? You basically want to have documents that relate to your contract, and contracts could be partnerships, whatever it is. So sometimes you have states, partnerships, investor agreements. Your company, your registration documents, your licensing, if that's important, if that's required, your license, copies of your license should be in there. Any other thing you could consider legal information that they need to see, especially if you've made those claims, you need to put it under legal, right? Sometimes employee contracts could be under here, and I think employee contracts should be under this folder as well. Yeah, so somebody has asked a question, and I think that's what I'm dealing with right now. So employee contracts should be under that folder as well. Sometimes some people want to put that under C, but we will get there. So under legal. So the next folder you should have is probably your finance, and under finance, you want to have subfolders that include things like your invoices, those commercial documents, invoices, proof of delivery of service provided, your ink statement, maybe P&L if that's applicable, because most early stages do not have that initially. So, but you want to be able to show proof of your finances, bank statements, that, corroborates the fact that you have done the transactions that you say you've done. So you want to have those documents in there. So in addition to that, you probably want to also have your tax documents, if applicable as well. Now, another stuff you want to probably have would be maybe a people folder. So under people folder, you want to have things like your team profile, who your team members are. Of course, in the finance, you want to also show, because you want to be able to calculate your burn rate, so you want to be able to show the salary, your proof that you're paying salaries, and proof that you're probably also paying yourself salary, and all of that stuff, right? So under your team, under people, you want to be able to include, assuming you didn't include your contract, your employee contract in your legal, you want to include stuff like that under your people. People need to know who you employed, who they are, where they're coming from, their CVs and stuff like that. And some people go as far as including their, pictures and profiles of the people they are working with. So somebody said, what documents does investors really want to see? I think it is captured in most of what I've said already. Investors really want to care, depending on who they are. Investors are interested in knowing that this business that you want them to invest in has a future. And one way that they can know that it has a future is their ability to see a history, a track record of transactions that you've done, regardless of whether you're revenue or pre-revenue. They want to be able to see if you're pre-revenue, what are the partnerships you've signed that gives them a lot of comfort and cushioning, that not just that this has future, but that you can execute, right? So that's what they're looking for. So you want to be able to organize this document as neatly as possible, and then you want to safeguard those documents by making sure that you share it with only the people that need to see it. And so one of the ways you can regulate who needs to see it is, it's not a public document, so don't make it a public document. Don't use the public setting, right? Because they are your confidential information. So you are well within your rights to require anybody who wants to go and see those documents to sign a non-disclosure agreement for you before seeing those documents. So you're very well within your rights to require that. So for me, I think that in a nutshell, those are some of my thoughts around due diligence. I believe that in asking questions, in providing some questions, in asking questions, I can provide a lot more clarity and provide a lot more insight into this subject. So I wouldn't know, Victor, if there are questions you think I can treat right now.
Yeah, I mean, again, thank you so much. Thank you so much, Uche. This particular session is designed to make it a bit more interactive, and I do hope that people will throw a few questions. But what are the key things that we've learned as I take us through this? Clearly, we're looking at founders who want to raise some funds. Raising funds is the same like you going to apply for a job, because ultimately these are the people that will provide the resources you need to be able to run your organization, and you need to take it seriously. My colleagues will be looking at all the questions across platforms. We're on LinkedIn, we're on YouTube, we're on Facebook, and we're on Twitter, and then they'll stream across all those platforms. We're streaming across all those platforms, and they drop the questions. But a quick thing is the fact that I know this is not an African thing. This is not very much a Nigerian thing, but he's called it out. You need to keep documentation. Please and please and please. He's called it out, but I think it's very important. You need to have documentation for anybody to trust you. And I think that was a major thing was calling out, and we'll see it in the question. So if there's anything you take from this, is the fact that document everything. You need to show to the other guy that I can be trusted. If you do not have documents, how can I trust you? So again, documentation is key. As we go through the times where, in fairness, there might not be so many free money, raising funds is getting a bit more trickier. For you to get a $50,000, I remember when I gave a startup, in 2018, thereabout, a startup needed an investment of $50,000. Then it was 18 million naira to me. Now $50,000 is about 37,500 naira. $50,000 was 18 million. Now $50,000 in just about 4 or 5 years is about 37.5 million. So the impact, especially we're looking at the angel, okay, because most of the guys that do big tickets, $200,000, $300,000, they don't look at the early stage founders. They don't look at seed fund because your risk level is still very high. So, but you need somebody to fund you for you to de-risk your business and prove you have a concept, you have a product market fit. Those funding will come from angel investors, which can be individual angels or network, if you listen to him very well. Network means a group of people, they put some small funds together, you need to raise 20, 40, 50 million, 100 million, put it together for you to test out your concept. They need to see documentation. It's not about the language you speak or the church you worship or the mosque you go to. They need to see documentation, and he has called that out. Clearly, one of them is term sheets. What is the basis of all of you that have come together? How do we own this company? He called that out, and I think we need to pay proper attention. He talked about other things, financial statements, your expenses, your payroll. At this point, before we take questions, and I'm just giving time for people to put together the questions. At this point, I need to say clearly that you need to separate yourself from the startup business. We have seen a lot of wonderful things at angel level. I wanted to invest in a company sometime, and I asked, how much do you owe? The person told me they owe 60-something million naira to the wife. I said, how did your wife give you? No, actually, it didn't pass through the business, but when they gave me the list of debtors, the person put his wife and 60-something million. I'm like, how did you get in here? There was no way the money went into the business or how it came out. That's what they're looking for. They need to see the money come in. They need to see the money come out for them to understand your finances and be sure you have customers and you're making money. Startup company is not your personal company. Separate it. Especially if you intend to have angels like him. Separate it. It's not your personal money. He said something and I wrote it down. Pay yourself a salary starting. If you don't have money to pay, tell us how much you are paying yourself and be borrowing us. So when angels come in, they recognize how much they owe you as salaries. But you cannot just take from the inside it as if it's proceeds of sales and you start spending. No investor, you do all the pitches, they won't listen to you. Because what do we invest in? First is the character and the team of the people. Nobody cares about your idea. Any idea can fail, any idea can succeed. Who are the guys driving it? What's the level of their integrity and transparency? I know these are not things we like to hear in this part of the world, but if we really want to scale up, we need to be very transparent. We need to be able to hold ourselves accountable. And those are part of the things he said, where he said, show yourself how much you are paying yourself, how much you are paying your team. Let us see it pass through. So they see how much you make and they can calculate the burn rate. If I give you, I do remember, and again, this is clearly just to create context. I've done angel investing since 2017, making 5-6 years now. And I remember one of the first investments I made in January of 2018. It was a pitch. It was a hub, and these guys came in. And what the guy had requested, when I saw all the numbers and everything, I told him clearly, if I give you this fund, you will burn out in 6 to 9 months. You will tell me stories. You will not face to do the work. You go around looking for money again to continue to run. I gave that company, and they are well and doing very well, very, very well now. Solid company right now in the area they play. I gave them almost 12 times what they asked for. Because from the reality of the numbers that I could see, that was what they needed. But the person was a bit conservative and was quoting something that will definitely get the person stranded. As an angel, my job is to help you succeed and hold you. I don't want you to fail. Don't manage. Put the information on the table. Let me decide or not. I gave them what they needed. I see a hand raised. Bode Obejise has raised his hand. Technicals, can we allow him to speak up, please? Please unmute him so we can take his question either to me or to Uche. Then we'll now take other questions. But can we unmute him? I think he wants to ask a question.
Yes. Good evening, all. I'm unmuted now.
Let's spotlight him and unmute him. Go ahead, please.
All right, thank you. Thanks, Uche. Thanks, Victor. I personally appreciate the perspectives you've shared. For me, I'm at the point where I'm interested in putting some money in a tech startup in Nigeria.
Yeah.
And you won't blame me. My risk aversion is at this level because I also understand. Yeah. I understand, the dynamics of our economy, the struggles of businesses, and all of that. From you, Uche and Victor, please, can you advise from businesses you've invested in the past? What are the boxes that you've spoken a lot, but what are the boxes that you can think about? What is typical of those successful businesses? You said a lot about documentation, but what is it about the drivers of the business? Your confidence level, was it more from the financials or the potentials the market offer? And the time in which these businesses have entered into that space, so that it can also help, greenhorns like us to be careful, when we go in.
I get it. Okay, buddy, nice to see you again, and that's fine. Thank you so much. I'll go, Uche, and then we will see that you can also give it a go together. So, buddy, clearly, what are my must-haves as I look at what to invest? The first thing I'm looking at before I start taking a look at the company is, which sector are you playing? There are some sectors that for me, I call foolproof sectors, which will continue to grow based on the dynamics. If I look at Nigeria again, let's look at Nigeria. I play in 5 sectors and I'll tell you why. I play in sectors that I think are foolproof, that except the managers of the business mismanage it, there's an upside. That's me as an angel, okay? I will forever play in things that involve food tech, agri-tech. Upsides are high. I will play, people play a lot in fintech, commerce and commercials. You won't get it wrong. I will play in energy space. We cannot solve our energy problem in the next 10 to 15 years. Okay, so again, I will look at sectors where I think is mass issue, healthcare, for example, mass critical mass, where there is upside, edutech. The potentials are huge. Most of the people that are coming out, and we're churning out millions of kids. There's no institution today registered by government that gives a government license that is teaching you on any future skill around tech, software, hardware, coding, data science, nothing. The best to get in university is statistics. Now, all these kids coming out, there's big opportunity in tech. I will look at that. So first is I will look at the sector, what it returns. The next thing after the sector, I'll look at profitability, government regulation, blah, blah, blah. So it's a heavy due diligence on sector before I even look at you. Then the next thing is I go to the person. Character is big. We do hackathons, and once we pay them the hackathon money, $5,000, $2,000, they start fighting. We just paid some hackathon people. After the last while, we did incubation and all that. By the time they're through with incubation, they have only $5,000 amongst themselves. They start having issues. Team and integrity of the people. You don't want to put $200,000 in the people and the next day they've all resigned. And they've shared the money. So integrity, and then I will check the team. What are their track records? Let me also let you know, many of the due diligence they do now, they also go online to see your value system and your sentiment. People do due diligence with what you call your digital footprint. Who are you? What do you say? How do you act? What are the things? What are the sentiment? They draw up a profile of who you are. Okay. I will end once I've looked at the ideas, due diligence, and then of course I now begin to look at your ability to now maximize. I've seen big opportunity in the sector. I've seen that this team is okay. I'll now begin to look at your process to be sure that even though you're a good people, you have character and all that, and the sector works, do you have the competence and the ability to unlock the sector? And that's where my due diligence will come in, your financial due diligence, accountability, controls, processes. Are you different from the business? Do you have the right team? Do you have the skill set? That's the process for me as an angel and someone who's been investing in the last 5-6 years. But I'm sure Uche also has some dynamic ways he looks at it. Uche?
So Victor, very well done. Most of what you've shared are the things that I would have shared as well. I just like so in that sense, I have no new thing to add apart from providing a bit more context to some of the things you've said. Right. So, for instance, when you talk about team, one of the first things I want to look at, and by team there, you're looking at founding team, right? One of the first things I want to look at is how well did these people know themselves? How long have they been together? What have they done together before, right? What have they done together before? You know, I tell startups that when you're looking for co-founders is like looking for a wife.
Yeah,
right?
it's fast, yeah.
You don't walk into anywhere and say, come and be my wife, right? There are things you check out. So most times the people who make the best co-founders are people who grew from way back. So it's either they started together from school, or they work together in some place for a number of times, and they've got to understand themselves to a point where they both complement themselves, right? And there are lots of examples to show that. And some of the biggest ones from the way back would be the founders of GT Bank, for instance, right? Tayo and our big Oga, they grew up together, knew themselves, worked together, to the point where so most of these things we talk about, they're not necessarily new things, they're things that existed already. So Tayo and what's his name?
Fola Adiola.
Tayo and Fola were great friends from way back, worked together. They were able to start GT Bank together. The same thing, Access Bank. When you look at Ike and the current CEO right now, the same thing, right? So these are not necessarily things that are new. They are just that. So when you're looking for co-founders, make sure that you're looking for somebody. If you permit me, I'll use the word chemistry. That you have great chemistry, that you understand yourself. You know, we use chemistry in relationship, but you understand yourself because it matters. Then, as an investor, I want to look at your history together. So most times, if you've built something together before, and the thing, whether it succeeded or failed, and you're still willing to work with yourself, is a good sign for me, right? The other thing, I want to also look at your experience, the experience of the founder. So don't confuse this with the team. There's a difference between the experience of the individual founders and the ability to gel, the ability to get along. They are two different things. So the experience of the founder is important. If you come to me and say you want to build a health tech, right? For instance, do you have any experience in the health tech before? You don't have to be a doctor, right, to build a health tech, but you should have some experience to the point where you understand the operations, especially around the things you're trying to solve. Because if you don't, it's going to be a problem down the road. So most times people say, okay, I'm not, but I have a co-founder who is, right? And that's some comfort, okay? So in terms of experience, then the other thing is traction. And by traction, I like to say this because people confuse this, Victor. A lot of times people confuse the stories they hear from Silicon Valley.
Yeah.
A lot. So people come and say, you know what? If it was Silicon Valley, now it was in America now, I would have gotten thousands of dollars even before I've done anything. And said, listen, this thing is the same everywhere. Even in Silicon Valley, the people who get that money, there's something they have done that enabled them to get that money before they build a prototype. So what they do, innovation is important. Sometimes they would have gone ahead to build community, right? Even before they build the product, they have built a community of people who will use the product. So I keep telling people, sometimes people have gone ahead to take orders for a product they've not developed. Some people have paid them money for the product they have not developed, waiting for when the product is going to be ready. For crying out, they are not going to touch the money. For crying out loud, that is traction. So the earlier you understood that, so if I as an investor, if I'm evaluating your business, your startup, I want to be able to see what have you done. So sometimes people come and say, oh no, we're just looking for money. When we have money, we would then build the app and then we'll start getting. For kind of like, the business is not the app. If the business cannot be done before the app, you don't have a business. So you must be able to do that business before you build anything. Somebody said, but it's not everything I can do. No, it's everything. Just think hard enough. The fact that you feel that it cannot be done except to sit down and build apps means that you're not creative enough. And it means you can't even build that business. So even if I give you the money to build apps, nothing will happen afterwards. Right? Action is something. So my brother, Obey, you need to understand this thing is not charity, and it's not usually about the heart. It's not emotions, right? We want to be able to support people to grow. There's a part of what we do that tends to sound like charity, but no, it is as much as it gets that we're trying to support those who are creating more opportunities for other people and providing them means of livelihood, right? Which is what entrepreneurship does in the long run. But that's as close as it gets to charity. Every other thing, you have to validate, take common sense before you do those stuff.
Thank you very much, Uche. That's a well delivered, and thanks for the context. A take out from what he said, tech is not a business, an app is not a business. Technology and apps are they are an enabler of business. If you cannot tell us what the business is without plugging an app, you've got no business. Hassan, is it Hassan or Hashim? I want to quickly take Hashim, sorry. I'll take two of your questions quickly and then come to Uche. You said, how can investors authenticate those documents? There's scammers everywhere, okay? You need to make sure that for every document you've gotten, you talk to professionals who can help you authenticate, from bank documents to legal people to making sure the company is incorporated. I've seen a bit of interesting things in the last 6 years. I've invested in startups. Trust me, you want to be able to do that. If you're unable to do it yourself, ask for professional advice. People give me things at times. I try to finance people, let me come up with ratios on this. And by the time they come up with some of the ratios, liquidity ratio and all that, bond rate, I'm able to say whether a yes or a no. So that, I think, talk to professionals if it's not your core competence in looking at those documents. Then, do investors really look for proof of profit or strategies to expand your business and the market base? He said traction. Nobody, I'm not sure any angel investor is looking for profit. We're looking for traction. And I think when he said the word traction, traction does not always make money. Okay, traction does not always mean money. Traction is, are you making progress in the direction of your strategy? Traction is, can I see an improvement day to day in customer acquisition? Can I see an improvement day to day in your strategic direction? Can I see that you've even started earning? Is there a proof that you've earned? Have you built an MVP? Are you testing out? So there must be something that shows the word traction. Even if you make your seed fund, before you do your pre-seed, before you do your seed, you must show traction. That's what determines the new valuation and the next of people. Because again, investment is, people like to, okay, by the time they have your investment here for a while, they want your traction to have allowed their investment to have increased to an extent that the next round of investing makes what they put in you, I'm using simple terms, a lot more. So if I've invested $10,000, by the time you are doing your seed round, when I do a valuation, my $10,000 is now worth maybe like $70,000, $80,000. I'm excited. How does it move from 10 to 70? It's traction. You've gotten more customers, you've gotten more sales. The overall valuation of your business is better. Because it's better, my small 2 or 5% I have in you, the valuation is better. That's traction. So always know that all through the life of a business, I mean, I'm always on Bloomberg, it's running on my screen and all that. People are showing their performances. Tesla result just came out, they're about to $500 billion valuation. People will buy more stock, some will sell more stock. It's traction. I see so many startup founders today who want to live off investors' funds, who don't have investor memos to share with you every month or every 2 months. They think the only time they come to you is when they need money to either pay salaries or. You need to let people know that I'm making progress, I'm increasing customers, I'm building a product. We're having a strategy, we're communicating better. There must be progress that unlocks the wallet, and those progress are called milestones. So when people give you money, there are certain milestones that when you meet it, I give you this new amount. Most of those funds you see that people do raise, it's not as if they just wrote them $400,000. There are milestones. You move from this to this number of turnover, and then you get this amount. You do this, and then you get that amount. Again, that's how it works. We are not able to teach you everything now, but at least we'll give you synopsis that helps. So that's for my friend from Ghana, who is talking about, do they really need to see proof of your profit? Startups, nobody cares about your profit. Traction. Okay, we don't expect you to be profitable. If you are, we'll be concerned. Okay, if you are keeping so much money at an earlier stage, we want you to spend it to expand the market. That means you have potential to make more. We don't want any startup to have money kept in the bank. No, deploy that money to grow the market and bring more returns for shareholders. Don't keep it with you. Okay. How do startups protect their IPs and proprietary business secrets before and during due diligence? People sign NDAs. Okay. You make sure they sign. I think he mentioned, Uche, you want to go at that?
Yeah.
Go ahead.
So I think that when I was talking, it is your right to request for an NDA, non-disclosure agreement, for them to sign if they want to see your data room, right? So first structure, do that structure, and then give them access as they sign the NDA, right? But again, before you start giving somebody access, right, or NDA, you have to be somebody you evaluated that is serious, right? It's serious conversation. Sometimes they send you term sheet, and they send you term sheet. It's not been signed, right? They want to see before they sign, and that's one of the ways to say we're serious about this thing. Okay. Now, and there's something you mentioned, Victor, which I think is important. I should highlight again: investor update. A lot of times, startups, I think a lot of startups are struggling with investor updates, from my experience. But what they don't realize is that investor update is your quickest route to raising money.
Correct.
If you raise money, and here's a free advice. If you're currently raising, go and look for investors that are investing in businesses like yourself right now. Go and get their contacts, their emails. They have not invested. Start sending them your updates on a monthly basis. There is a small tool I created. I can send to Victor and send to the community. It's not anything new. I just created like a simple, because I noticed that people in our community were struggling with this. And I just created a small five slide reporting template using the ACTA framework, achievements, challenges, targets, and ask. So using that ACTA framework, simply summarize what you've done for the month, summarize what your achievements are, summarize what your challenges are, and how you're dealing with those challenges, summarize what your targets are, summarize your ask. So people don't know that investor update would help you. By the time you start sending these people in this update, they're not your investors, but you're sending them the update and you're asking them for help. What happens is, a lot of times they want to come in and help you. So they may not invest immediately by giving you money, but because you're sending them this update and they find something they can help you with, they will call you and say, sorry, you're looking for this. I have XYZ people that can do this for you. Sometimes they're connecting you with people in their network that can do that stuff. And what they are doing is that they are now building relationships. In case you don't know, raising funding is a contact game. You know, in Nigeria, we tend to because we tend to cry over the fact that you need to know people for certain things to move. Yes, I know that we overdo things in Nigeria. However, you should understand that there's nowhere in the world where you don't need to know people to get things done.
Yeah.
And there's nowhere more true than in the VC and the startup space. You need to build your relationships. People want to find startup. Our culture in the startup ecosystem is that we share a lot. Okay, so one way you can leverage that is to ask for introductions. So you know that I'm connected to Victor, for instance, and you want to reach Victor, you send me a message. Uche, please, I want to reach Victor for social, so can you please introduce us? It's as simple as that. Take Victor's stuff, put in your mailing list. Every month, as you're sending updates to your investors, include Victor in your list. You'll be shocked that Victor will suddenly find that he has an interest in what you're doing, or that there's something he can help you do, even without being your investor. Because a lot of times investors want to help you. And it's about that adage that says when you ask for help, when you ask for money, you usually get advice. But when you ask for advice,
get money.
And you get money.
True.
So, with that.
Thank you. Uche, I mean, that was you roaring, and I hope quite a number of our startups are hearing. These are coming from people that run businesses and are investors. And I agree with you. Today, as you are speaking, there are quite a number of startups that today I advise, I've not invested, but I'm thinking of investing. Do you know why? As they take the advice, as they improve, as they de-risk, some of the things I'm scared of, as I begin to see that they are doing it, my appetite, my fear of investing in them begins to drop, and I'm getting tempted. So again, share with people, that can help you. Advice is one of the most critical things. I know we have run out of time, and it is not in our tradition to keep us beyond the hour. We've gone 6 minutes before. I know this is important in a time like this, but I'll take this last question and then we'll round up. And this question is saying, how can startups adapt to changing market conditions and investor expectations in terms of financial due diligence? Again, investors, Ps, VCs, angels are human beings. Don't cook your books. Be realistic. When things have changed, let your investor update change it. You promise people money in dollars. It was at 360 naira to a dollar. It is now 750 to a dollar. Let us know the reality. It's an election year. Bring it up as challenges. The minute startups begin to, of themselves, priming the risk, investors begin to trust you more. Why do you think global people have so much news and information and all that, telling you everything? There's nothing like investor information overload. If they're, let them know. And for you also be realistic. I met a couple of people and I asked them, they said we're building this technology platform. Have you built it? No. Okay, so, but we want you to come in, the valuation is $5 million. I said, wait, $5 million, how? He said, that's the usual valuation for startup idea in that ecosystem. Which ecosystem? I say 5 million. I say no problem. How much is the dollar? They say 750 naira. 750 naira. I say multiply. So I said this idea you have is worth how many billion naira? So giving me this idea, and I should again be realistic. You are pre-seed. You are high risk. Anything can happen. Be realistic with your valuations. Be realistic with the expectation. Be realistic that so much dollars is not pouring anymore, and that you now need to go to people who understand the environment like you. I'm aware most startups hate local investors and local angels. They hate to take money from local people. Clear. They'll micromanage you. Okay, which is something?
Yeah. I wanted to just jump in on this, right?
Jump in.
What they don't realize is that even the foreign investors will think twice to invest in their startups without local investors.
Clear. So, again, is the truth. So you need the local people, again, at the earlier stage to handle you. And I will end as we round up, and thank you very much, Uche, by letting you from how Uche ended. When you ask for money, you get an advice. But when you ask for an advice, you most likely get the advice plus money. Make sure that you surround yourself with people and investors that will hold you and give you advice. Seek first those advice and money will come. Local investors look on local nuance. They network in places where they can tell you where the dollar will end tomorrow or challenges and everything. Thinking that, oh, I want, and let's come away from the Yahoo and scamming mentality. I want a foreign man's money so that I'm not accountable. I'll spend it anyhow. And then when the money is gone, I tell money is finished, nothing will happen. Nigerian investor will ask me questions. You need those. If you are not in the game for the short term or to scam or to hype or to make money and dump it and all that, you are in for the long haul. Get your local angel. Get them to give you advice. Get them to help you network. Get them to help you and hold, and you will be able to build your own unicorn. On that note, I want to say a big thank you for everybody that has been a part of Techbiz, the 94th episode in the series. A big thank you to our speaker and facilitator today. And I'm sure you see the passion, you see the enthusiasm as he dishes out the information, his love for the ecosystem and ecosystem player. He's part of the director of SSE Angel Network. And that's Uche Aniche. Thank you so much for your time. Thank you for bringing, speaking with us from the depth of your heart and sharing from the wealth of wisdom. We're quite grateful. This is not textbook conversation. These are people in the trenches sharing with you what they see on a day-to-day basis. And I want to say a big thank you. Techbiz was brought to you from the stable of Eco Innovation Center. It's one of our platforms where we provide hand-holding opportunities and support for startups in the ecosystem. We have a mission to help startups achieve commercialization, such that from ideation to commercialization, we want to provide all the support needed across the value chain, and that's why we exist. But much more than what we do, which I anchor every last Thursday of the month, is the fact that we're trying to build a community. Today, we've got about 2,000 people in that community, thereabout or more, on our Telegram page, where we share information, we share ideas, we share opportunities with you, we share all those that are relevant. Much more than this, where it's an ongoing basis. You can ask questions, people can support you. Quite a number of people are there whom, if you need anything, as you drop it in there, they can reach out to you. Make sure you join the Telegram page or the WhatsApp group. My colleagues are dropping the link right now. And again, follow us on Eco Innovation Center. That's www.eco Center. I think you'll be able to see a lot of the things we do. We offer trainings, we offer hackathons, we offer support. We are one of the biggest acceleration hubs in civic tech. And therefore, when you're building things that goes beyond what is for commercialization, you're looking for government support partnerships, we have built those relationships, and we can help you in those access to commercialize your civic technology, things that is for the common good, okay? And that's what we do in Eco Innovation Center. We have an array of log to the website, see our calendars, see our trainings, see our boot camps, see our meetups, and try to be a part of it much more than the Techbiz you're in. But my colleagues will have dropped the link, and I do hope that we can join this community as we begin to empower each other and build a community that will support each other as we go through the journey of building ecosystem, building the startup ecosystem together. I do look forward to hosting you again next week. My name remains Victor Benga Folabi. I am the founder of Eco Innovation Center and the anchor and the host for Techbiz. Thank you very much for keeping a date. We do appreciate sincerely your being a part of this. This recording, as well as the 93 other episodes of this recording, is available also on our website, ecoicenter.com/webinar. So you can go there and see, in case you joined us quite late and you want to go over and see what we talked about. You have this full recording by noon tomorrow. It's already up. All you have to go is go to, and my colleagues can drop the link for us now on the chat room. Go to www.ecoicenter.com/webinar. You see the whole 94 episodes after this. This also will be up. You see them and you can go through them. Should you have questions after going through the webinars or going through any of the topics and you need some clarification, feel free to drop a message for any of us, either on the WhatsApp group or the Telegram, or into our personal DMs. Feel free to reach out to us. And I do hope that we can be of support to you. Thank you very much for keeping a date with us. And we do hope you have a fantastic February, which is knocking at the door. Again, January gone from 2023, we're going to the month of elections, and I do hope you have your PVCs, startups. I hope you have your PVCs, and I do hope that you'll be able to vote wisely. Thank you very much, and do have a great evening.